Okay guys, moving into lesson 12. So current price action, let's start with the GBP USD. So on the left hand side you can translate various levels, weekly level here as well, which I've spotted has been broken. I've taken this area 1.2812 from an update because my earlier bias was that we could maybe reach into the lows given the PA and the signaling from the 3-month time frame, the 3-month chart quarterly. However, what happened on GU was we dipped into the 4-hour region, as you can see there, and we spiked through it various times intraday and intra-week, and then we had the explosive move come right from that area and from that zone, and we can clearly see where the wicks are on the weekly. If I translate that into the day, this is what it was looking like on the day, and then into the 4-hourly coming back. Let's go back over to the week, into the 4-hourly. We can see that the market has pushed all the way through various boundaries, broke key level of resistance there. So I've taken the next key zone from this significant high here. We could have either gone from this zone or, this wick on the left here, or simply put right there. Any is fine. This area probably is a little more accurate as we can translate into this low, which was made for the uprise of momentum. So what's next is my bias on sterling is that we could pull back. We could pull back clean, and then we could start to rally into the highs of 1.3380. And I've took the spike of this candle at the top there as my main counterpart for the next trigger, so to speak, as to where the pound is going to run into. And then we could maybe see a pullback, fall off, whatever it may be at this area. So there's the weekly PA. Currently, as you can see, if I put my crosshair at 1.3 and you can translate this over to the right-hand screen on the hourly, you can see that psychological level of 1.3 is forming, the price is actually forming some intraday resistance right in this little area here. So let's get into the hourly and go across a few pairs. For the next few days now, it's October the 21st. For the next few days, Monday at the moment, we can clearly see that price is slow. It's 25 minutes past 4 p.m. London time, and over here on the right hand side we can see that over here on the right hand side we can see that price momentum has been bullish, and we have had intraday pullbacks release, and so on and so forth. And this next step is relatively quite simple, to be honest. What I will mark up over here, I'm just going to use a standard trend line tool, and I'm going to put the small area, the small line right there at 1.3. Now 1.3, as you can see, what we've had today is we've had a small push into that area, but if we really zoom into the chart, we can see that 1.3 we have, rally into it, we have the release there, pressure's come off, money is now coming out of the market from this earlier zone. I'll get into this in a moment, how we can really mark this up to get pinpoint accuracy. Entries, however, over here again, we were breathing above 1.3 just by 2 pips or so. Just for 2 hours, then price declined, come back below, and as you can see there, we spiked into the region. So 1.3 psychological area, we can see that it was resistance for in one session, earlier session in London today, and now we're back below that zone. So what I'm actually expecting now, after all of these drives and all of these price bumps, if you will, if I just tile this up with number one, let's have a look at the day. Day, we can see momentum is slowing down, and if you come into the 4-hourly as well, that the carry, the higher lows, the higher highs, the higher lows, the higher highs, at some point this may need to retrace. Over here, what I'm looking at on a pure price action perspective is that after the 600 pip move and the 2 very, very bullish weekly candles, we can see that 1.3 on the 4-hour, there's 3 4-hour candles penetrating through that area, but the bodies are back below. Now, what I can simply go ahead and do if I want to is just copy and paste that over there just for reference. So what a good trade setup would be at this area is, number one, recognizing what's happened beforehand. We're in a new weekly cycle now after 2 bullish weeks. Primarily, my thought process is that if pound does need to release and give us some downside momentum, we could potentially come all the way back into this zone right here, because this is where the liquid area is. It lies after the first candle, which is actually this one. I was doing some one-to-one mentorship the other day. I was going through various different principles. My charts, I may need to just scrub them up for the next few days. However, the place in which holds the most value is from this candlestick, and then you can see the release rally over here, the release dump, sorry. So what I'm now looking for with pound is we could expect to see a decline back into 1.2650. Above that, we obviously have the weekly area, which I marked on and I showed you guys at 1.2784, and we have a daily level over here too. So we have level 1, 2, and then the medium-term weekly range, the weekly cycle range, the intra-week range. So worst case scenario for this on a pullback, I believe that pound could come into 2.8 and then 2.784. So what I would do, I would weigh up this target as being the first point of call for a target projection. And then if it does start to dump through here, but given the fact that we're more or less 180, 190 pips away from current market price, that is a sufficient amount of pips for me to actually just simply go in, weigh up the risk reward, taken from the 4 hour. Remember, I think I mentioned this on earlier videos. If we utilize the 4 hourly in with the hourly and look for certain patterns and certain price behaviors, we can get synchronization between the two time frames and a higher level of accuracy for our trades. Now, so if I'm looking at 1.2800, what I'm going to simply go ahead and do is I'm not going to translate the weekly. I'm not going to translate this weekly black horizontal level onto the right-hand chart. I'm just going to simply put a marking there. So that's a potential target. We do have intraday areas of support, i.e. right here. This area will be of value. We could see price decline, okay? But back off this level, if this is now a new significant high, we could come in, double bottom here, pop back up, form a right shoulder, and then we could start the downtrend movement. So 180, 190 pips for me is a sufficient target. And in terms of stop losses so far, what I've looked at, I've only been on a chart for five minutes or so before actually putting this video, recording this video and putting it together. If we're looking at a short setup and a short position, anywhere from right here, stops 3 to 5 pips above the high, so the wick high over here, tweezer top. But what we're actually looking for, guys, is we're taking 1, 2, 3 spikes. Okay, we can see momentum slowing on the 4 hourly, and we also have the spiky price behavior on the hourly there too. So entry number 1, I've actually missed that. The first entry would have been, okay, when you recognize the market's popped up and then it's more or less put its head above water and then it's come back underneath water, i.e. here, price action telling me that there's weakness, especially on the higher time frames, and there's weakness showing at 1.3. And now what I need to look for is, that would have been the first entry there. When the market comes back below water and closes, we've got the tweezer top, we've got that spiky behavior, spiky price action, and also coinciding with the 4 hourly, that would have been my first point of call. Entry here, target here, stop 3 to 5 pips above the high. However, because I'm coming a little bit late today, this would have been a good entry as long as price is moving below. But this candle right here, better still. Why? Because it's now had the 4th spike through the area, and you can see where it's tried to reach, but no, it can't. It's actually been slammed back to the downside right there. So entry anywhere more or less here, stop above the highs. I'll take the average high there, so I'll take the highest wick, 13, so I'll go into like 17s, and my target would be right here at 1.2800. So I'm taking that target from the previous plottings, and that's the first point of call, because I know that if you look at the price action here, we banged our head on the weekly, we drove through, we retested it as support 1, 2, 3 times. So it's a good area of value, and it can give us confidence to hold this trade for potential, for maximum potential, sorry. So it's a 181 pip target from a 32 pip stop loss. So we're going to see how this one plays out in the next few days. What I would also do on the hourly, simple markings would be, again, I mainly use simple trendline tool for this, but I'm looking at this area. Okay, so that area, you can clearly see momentum was more or less sideways, and then we had the blowout. Similar concept to looking at where the volume is being produced in the market and where the price is being pumped into. So we're A to B right here. So this is more or less midway. I'm not going to get into super logical numbering, but what I am going to be aware of is that if market does continue to fall, if we reach this level, there could be a rebound, an intraday rebound. So from it's more or less 100 pips from current market price. So what I would do, trade management wise, I would take off 70% of the position here, and then I would let the rest run. What's also, I'm going to be drilling this into your head time and time again as time goes by on live market exercises. But if the momentum is looking decent to the downside, and we can see that pounds now rolling over, the 4 hourly looks strong, and even if the daily starts to really roll over and show us a reversal is in place, then it will give me confidence to hold that trade to the next target. If we do come to 1.2786, we could see a rebound here and a pullback to the upside. If not, if we shatter this level, we know that the next levels are the downside. And again, this here is a magnetization zone, if you will, and I'm looking for markets to actually maybe come and print lows into that area. But again, we have to take it every step as it, take the market and take your trade every step as it comes. Continue to monitor every 4 hourly. If it's an hourly setup, as you can see on the right hand side, I don't really need to come into the 15-minute. I don't really need to go deeper and refine that, if you will. I'm happy, I'm satisfied. 4 hour, it's matching up complete, and it's very, very straightforward. It's simple as that. So I'm using the top-down analysis perspective over here to then come into this lower time frames and simply find the entries, stop placement. The risk reward is phenomenal, 1 to 5.6, 32 pip stop for 180 pip target. So that's the primary target for the entire trade, but I will be watching and monitoring price around this level because I know we could have a hiccup, if you will, and we could see a rebound from that area. Right, so going on to gold. Gold, I do have bullish projections on gold in particular at the moment. However, the new week has started. Now, 1480, we have our weekly level. And we are looking as if market could potentially tap into that once more. But look at the previous price action. Spike, spike, spike. If you go into the day, then this area of value right here, we could see a spring back, even though on the hourly, if you can see, we've had a little bit of movement to the downside right there. However, we can pull back quite swift and quite sharp. So I am very, very wary of gold at the moment. So we have all of our analysis and markings on over here, but again, in the hourly time frame, excuse me, in the hourly time frame, judging from last week's PA, we simply have this floor, and I've taken it from the bodies and I brought it across. So 1, 2, 3. What we could potentially see on gold is a retest into this region, and that could set us up for a nice buy potential and buy trade, because I am bullish on the higher time frames, weekly, daily, etc. from the previous videos. So gold at the moment, we are in this zone. A good entry short would have actually been at from the closure of either this candle right here, where we've taken out the previous wick and the momentum. So 1, 2 momentum starts to drive to the downside, and then upside we have the spike through and then the closure back below. So there's 2 entries here. Stops will go above the high there, and you could take it down into the next region, which is the intraday level right there. But again, right now you can see price action on the hourly time frame. We are going sideways. Even though price is falling, and it can still fall down into 1478 and can still decline, 60 pips or so, the price on the hour, it's sideways. You can clearly see we're in this sideways channel. So I don't want to get fooled, and I know 1480 right there. Again, I'm not going to translate, but I'm not going to copy and paste the weekly. But if you look at the weekly at 1480 to where my crosshair is, okay, where I've lined that up over on the right hand side, you can see 1480, 1476, this entire little region. Gold can tap into that once more and then give us our push to the upside for the week ahead. So anywhere around here, preferably if we've seen some spikes run through this area and give us the rejection necessary and needed, we can then take long positions to the upside. I would personally, to really slaughter gold, long position, boom, anywhere around here. I'm just going by potential I. So 55 pip stop, whatever it may be. Wait for the lows to be created. Now target 1 could be intraday, 164 pips. However, we are looking to go a lot higher on gold and take out those highs, which is 540 pips or so. But I would be wary of, again, over here on the hour, we can clearly see we've had some issues previously where this high was once formed. I'm taking it from the body, the first drive high, secondary drive, third drive, and collapse. this area at 1514, 330, 350 pips away from our projected area to buy gold. That would also be the next point of call, and I'll monitor same scenario. So hopefully these will come through. GU executed the trade. I'm now short, and gold I'm waiting for, sitting on my hands waiting for the trade to come to me, and I'm going for, we have various levels of support down here, and I'm now looking for a massive rebound all the way back into 1550 highs across there. So when gold wants to move and the volume steps into the metal, you can, it's a case of, once you read the momentum, once you really pinpoint some entries, your the volume in gold and the liquidity is going to be high when it's found its overall momentum structure and where it wants to go next. That often you're looking at 50, 100, 200 pips, even maybe in one day or one session or maybe 2 days. And it does take a little bit of mental energy and extra care to monitor that wherever you are. So 330, 300, 400 pips, and even more back into the realm of 1550. I would take partial positions off gold if we do bump into this intraday area, because gold is very sensitive when it comes down to intraday key zones. But the way we're going to be marking this out along across our journey here, you'll see for yourself how we can really simplify it and keep it neat and precise, and again always thinking about chart hygiene. So let's see how this one plays out, and by the time I've recorded the next video, I'm going to be now stalking this. It's 4:20. I'm now going to be stalking this. I would say maybe in Asia, what we could probably expect is Asia, the price drives a little bit lower, finds its base support, and then rebounds from the lower intraday area, weekly support as well, and then starts to move to the upside. So I'm not chasing this. I've got my setup, I'm monitoring it, I know my long-term values and where gold can go, and it's all about seeing if there's an opportunity to, number one, enter with a tight stop, which we can over here on the hourly, and secondary from that, we can also wait and see how momentum is shifting, especially on the 4 hourly. I can show you examples as to how we can add multiple positions and scale in. GA, let's go into the hourly over here. Okay, so with GA, it's a little bit messy, Brexit talks, so on and so forth. With the weekly, again, we did smash straight through a weekly key area and a barrier, and we've now made a new high. What we can see here is 1.9 is vital. Going into the day, we can clearly see that 1.8850, 1, 2, 3, 4. We have 4 rejections on the day at 1.8850. Now, translating that information here, because it's very clear as to what we could see, we have that there on the day, and if you go into the 4 hourly, there's a 4 hour area, which I need to just mark, which is from this candle body. So we have the low, have the spike, 1.8800 psychological level. I found this area on the 4 hour after breaking out of all of the other regions and areas, and the high here as well. So I've taken body and then body there before the decline. So we're more or less in a range-based structure. What I can do is I can just copy and paste, because I know these levels are the ones I want to focus on if I am looking to trade GBP AUD. However, if you see over here, okay, we have tap into it, spikes, etc., etc. The 2 candles bullish engulfing, but over here on the hourly, look at the accuracy over here. Keeps dipping in, and then boom, we have the bullish engulfing on the hour after the spike and the failed drive through 1.8800, and now we're looking to go higher. The short opportunity I did lay out on GBP USD, I do see this happening on GA as well, and this is my bias. This is what I'm looking for. What I would also put on and be mindful of is the spike high there on the hourly, and if I wanted to copy and paste that up to the highs and just have these varied intraday areas, because we could tap into this one, collapse. Secondary, if we break through this, I know, okay, we have the hourly over here in which pound Aussie can come into and then collapse from that zone there too. There's 2 zones in which we could trade short from. However, the risk reward is pretty phenomenal, because if we're trading from this zone or this zone, then yes, our target will be this area right here. And then from a breakout of that area, I've simply put my intraday level on, and I also have my daily over there as well. So if you look at the crosshair where I found that intraday top, and then we had the breakout, spike back through, so the breakout retest continuation, let's we target 1, target 2, but if I look at 1.8655 here, where the daily area is, it's more or less just sitting below this zone there too. Sorry, not the zone, the line which I've just painted on the hourly time frame. So there's more or less two confluences sat next to each other. So what I now need to do is just wait for price to come to me with GA. It's currently no man's land. You can see it's mid-range. It's mid-range on the 4 hourly, but you can see that now, even though price absolutely bolted out of all of the markings that we had on beforehand, the market will always print. It's always going to print new areas of volume, liquidity, and again, if you translate it in a manner as to where to set your focus towards, which is here. This is complete no man's land. There's no trade on GA at the moment. If you try to go long here, it could fold and you'll be kicking yourself. If you try to go short here, it can continue to the upside. So areas of value. So 4 hourly, 4 hourly, 4 hourly, 4 hourly, copy and paste, brought that over, and then I've just gone in and marked out the highs and lows on the intraday from an intraday perspective, and I'm building up confidence as to where to base my trades from and to. So let's say market runs up into 1.9050 or 1.9100. Target's 1.88. There's 200, 300 pips on the table. Breaks that, 8.6. We're talking, big moves, decent moves. So it's worth the wait. Monday, I'm going to lock this video off now. But yeah, the next one I'll record tomorrow. I'll see how these setups play out. I'm currently in sterling short, and gold. You know what I'm waiting for there on gold, and then GA. Upside, then downside. Let's look for a nice reversal pattern around here, and then we can get into some deeper stuff. I can show you some of the orders on how I would sometimes split up my position sizes and go from there really. So Monday, there's not too much I can cover today, but we've seen a lot of movement on pound pairs in the last week or so. The last week didn't really hold too much value for gold, sideways, but I'm now waiting for the volume to be pushed into gold, more liquidity, and for the metal to find its feet. And that's how I would more or less break it down from this perspective. Thank you.